JC, what do you make of all of this?
Maria, we've been doing this for a long time. If this is a crisis, we certainly want the crisis to continue as investors because stocks keep going up. This is the most profitable crisis I've ever seen. We've been in a raging bull market for 9-10 months now. In bull markets, stocks go up. More and more of them go higher. More countries around the world break out to new all-time highs. That's exactly what we've seen. So we look at the market from the perspective of investors. We don't care about the economy. We don't care what the Fed thinks. All of those are lagging indicators. The market, the stock market, is a discounting mechanism of what's going to happen in the future, 6, 9, 12 months into the future. And what's the stock market suggesting? That things are going to be great. Stocks keep going up. I keep hearing about a bank crisis. European bank stocks were up 25% in the fourth quarter. They're up 40% since the last time you and I did this together in October. And if we know anything about banking crisis, if there's a real banking crisis, European banks are not going to be the leaders to the upside. So I'm seeing a stock market that continues to push off bad news. Bad news comes out and stocks keep going higher. We're getting sector rotation. Technology and growth stocks were the laggards last year. They're the leaders this year. We've seen healthcare stocks, which is the second largest component of the S&P 500. And Maria, also the second largest component of the Dow. Healthcare is 20% of the Dow Jones Industrial Average. And now we're getting rotation into healthcare. Sector rotation is the lifeblood of a bull market. You know who taught me that? Ralph Acampora, a mutual friend of ours. And he was absolutely right.
That's right.
And that's what we're seeing now.
Ralph Acampora, one of the best bulls out there for so many years, and he was right, spot on for so many years. But, JC, what is the bond market telling you? Yields are plummeting in the bond market. Look at the 10-year. We're at 3.3% right now, JC. Does that indicate that bond markets are saying recession is on the horizon?
Maria, people love to complain. They're complaining that rates are moving up too fast. Now they're complaining that they're moving down too fast. I just think people like to complain a lot. What's interesting about the bond market, forget about the nominal yields for a second. I want to look at the credit spreads, right? If there's real systemic risk out there, you're going to see it in credit. And when you look at high yield bond spreads relative to government bond spreads, we're not seeing them blowing out at all. So when you talk about the bond market volatility that we've seen, and when you look at the 2-year and 5-year yield, we've seen moves that we haven't seen in 40 years, no doubt about it. But you know what we haven't seen? We haven't seen that spill into credit. We haven't seen any volatility at all in the Forex markets. And Dennis, good to see you again. Long time no see. I'd love to hear your thoughts on the lack of volatility that we're seeing in Forex, considering the volatility that we're seeing in bonds or that we have seen. And we're not seeing the volatility in the stock market either. We're not seeing it in commodities. So when you talk about a banking crisis, I think the only crisis is in the portfolios of the perma bears.
What do you say, Dennis?
I have been bearish since January 5th of last year. A little uncomfortable at this point being terribly bearish, and the only position I have on in my own account is I'm heavily long the 2-year note. I'm long a little bit of gold, and I'm short a little bit of the stock market. I trade only for my own account and for the University of Virginia or University of Akron, and I'm comfortable with my positions.
Well, what about the lack of volatility in Forex? Doesn't that surprise you?
Yeah. What about the dollar?
Yeah,
because let's just put something overriding all of this. The CCP wants to replace the dollar as the global reserve currency. They've convinced the Saudis to start transacting in the yuan, and they've convinced the Brazilians to start transacting in reals and the yuan. What do you think? Is there a real jeopardy here to the U.S. dollar?
It's very disconcerting to see this movement away from the United States as the reserve currency of the world. But remember, reserve currency status always inures to the country that is the strongest military force, and there's no question the United States is still the strongest military force. We have, 11 aircraft carriers. China has 2. Italy has 2. England has 2. We still remain the strongest military power, and again, reserve currency status inures to the strongest military power in the world. It has for hundreds of years. It shall for a while. Eventually, the United States will lose its reserve currency status, but I will be long dead.
JC?
Listen, I don't know anything about aircraft carriers. All I see is that we have a very strong negative correlation between equities and the United States dollar. And when the dollar's been strong, equities have been weak. And when the dollar has been weak, which it has been over the last couple of quarters, stocks do great. And that's what we're seeing. Now, I'll tell you this. If there is a crisis, if it is going to be systemic, if we are finally going to see some kind of volatility in stocks and Forex markets, I think the financial sector in the United States is the one you want to watch, because in 2007, before the great financial crisis, where the financials index peaked, this is when Bear and Lehman and all these companies were still around. The peak in financials before the great financial crisis, Maria, is theoretically one of the most important price points in American history, right? Well, we're there now. So if the U.S. S&P financial sector breaks below those 2007 highs on the XLF, let's call it 3031. If we're below that, then perhaps risk is elevated. But until then, we're in a bull market, and I don't see any reason not to buy stocks. And the rotation into healthcare is very impressive. These are monster bases, Maria.
Yeah. Great to talk with you both, gentlemen. Thanks so much. We'll be watching. Dennis Gartman, JC Parets, thanks very much. Happy holiday to you both. Much more ahead this morning.